Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire is giving away to all the lucky listeners of the Moving Iron Podcast a free Firestone flashlight. If you're interested in getting one of those, go to marketing@axontire.com. Give them your details, tell them Moving Iron Podcast sent you, and you will get one in the mail. So just send that to marketing@axontire.com to get all your flashlight needs taken care of.
I heard it's been really good about looking down your throat, using it. Yeah, it's really good.
It's like the Swiss Army knife of flashlights. Use multiple uses. So it's going to be good. I'm looking forward to getting mine.
Yeah.
All right. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. Valley Transportation, our goal is to help you reach yours. And finally, no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Shawn Hackett is with Hackett Financial from Boca Raton, Florida. It's nice enough to come on and talk about what happened in the marketplace. Shawn, it's been a kind of an odd start to this week, but it's really kind of fallen in line to what you talked about, right? You talked about back in March, February, March, that we're going to have this long, prolonged, wet, cool, just horrible start to planting season, and then all of a sudden it's just going to snap and it's going to turn, and we're going to see a warmer, more consistent, wet kind of rain situation, and that's what we're seeing now. And the market is stepping back a little bit, going like, is this situation really as bad and prolonged as we think? And don't get me wrong, there's still issues with ending stocks and those kind of things, but it's almost like the planning progress reports have definitely turned the corner, right? You still have the northern plains like you talked about. There's still a big issue up there, but as you step back and look at it now, the market's going like, I don't know. I mean, things aren't as bad as what we thought they're going to be, and you're starting to see some of that spill over into consistent selling of crop, and the prices are coming down, those kind of things. So I guess talk about that a little bit, Shawn, and what you see happening there.
I think the market. Remember how last year we had, half the grain belt very, very hot, 3 to 4 degrees above normal, very, very dry. And, certain places like the Northern Plains and Canadian prairies, worst drought in 100 years. And outside of a few areas, yields actually turned out quite good, like much, much better than people expected. Some parts of South Dakota that thought they were going to have, a third of a crop or whatever, they had really good yields. So if we're starting off this season with more subsoil moisture and less heat, and if our forecast is correct that we're going to have a much cooler summer than the last couple of years with more regular rainfall than we had the last couple of years, then what does that mean for yields? It means we should have some really good yields. Yeah. And remember, in the East, they actually had too much rain last year, and that caused some disease problems and all. And they're actually, likely to kind of get a little less rain than last year, which is actually a good thing for them. So when you start thinking about, there's always something to worry about. There's always a place that's going to miss the rain. There's always a place that's going to get too much rain. But in aggregate, when you start thinking about this, and if we're right about a cool, wet finish and what that could mean for soybeans, I mean, it just looks like the prospects for this year's crops and yields look really, really good, despite the late planting, and despite the fact that maybe some farmers are going to skimp on some fertilizer here and there. Good weather could overcome some of that. And I think the market's looking at these high, it's not like we're talking about $4 corn now. We're talking about, $7, $8 corn, right. $15, $16 plus soybeans, pretty high prices, Casey. I mean, a lot of bullish news. And then you start hearing about, a lot of different independent sources over in Europe that are suggesting that even though they all hate each other, they're finding a pathway forward that maybe they can let some of this grain out of Ukraine and at least agree on doing that. And whether that's true or not, or I mean, but there's a lot of talk all of a sudden that there might be something going on there. And of course, you know, if only a portion of that wheat and corn from Ukraine came onto the market, that's more than the market was expecting. And so,
Right.
and then you're looking at harvest pressure coming up here for winter wheat in the US. And then everything suggests to us that the Russians have had a great finish to the crop. It could be as high as 90 million metric tons. And, you know, they appear to be willing sellers. So I don't know, it just seems like right now the market is trying to find a new pound of flesh to get the bulls excited. And I think it's going to have to wait for some kind of a growing season weather scare, you know, like we typically get later in the season to get them going again. But for now, you know, unless something comes out that we're not aware of, it just looks to me like, you know, we've rolled over and we're now looking at some kind of a protracted correction into June before we might fire up some worry over, you know, too hot, too dry somewhere in the country, you know.
Excuse me. All right. Let's jump up and talk about cotton a little bit. Cotton price still, you know, record high. You know, we're looking at $1.44 a pound right now, and you know it's really kind of just riding that economic wave, but it's still just it's again supply and demand. It's just like about every other crop here in the on the world stage. So cotton prices, you look at those and what's going on in the South. I mean, with they're ahead of schedule getting stuff planted. They're really moving along. They've had some really good opportunities to get stuff planted with some good conditions. I guess, Shawn, as you look at cotton, I mean, what's going to slow that bull down?
The big story is West Texas finally got some credible rainfall and it came in a nick of time that those dryland acres that, you know, can be a zero in certain years, you know, I mean, it may still be a zero. But they got enough rain that those acres are now, you know, there's a potential for something good. Like had they not gotten the rains and we got into mid-June with nothing, it was a zero. So they got very timely, important rainfall in West Texas that now puts those 3 or 4 million acres, you know, back into possibly producing some cotton. And now obviously the weather stuff to monitor weather the rest of the way, but at least I think took some of the punch bowl away from the bulls for now, and took them away from, you know, pressing. And so December corn is kind of backed off here a little bit. But don't forget, you know, we're not the only ones that grow cotton. In Northwest India and Gujarat grows a lot of cotton, and there's a lot of reasons to believe that the Indian monsoon might get off to a pretty slow start here in June, which that's not terminal, but especially in the northwest part of India, you know, we think that's going to be a problem spot for most of the season, quite frankly, and that's where they grow most of the cotton. So good weather in the U.S. is sort of being offset by some worries over Northwest India, and so that keeps the bears from getting too emboldened until they see more about what's going on there. Because remember, India really downgraded their ending stocks because they overinflated production the last couple of years, and of course, you know, India just seems like they want to start banning everything. They banned wheat, and they just a couple of days ago they banned sugar exports beyond a certain point, and everyone's worried about, well, if this cotton crop doesn't look so good here in June, they're going to ban cotton exports next. You know, that seems to be what they're all about now, is just putting a limitation on how much they're willing to sell to the rest of the world, and saying at that point we're not selling anymore, and probably rice is next. I think we talked about probably rice is next coming up. So I think we went from a raging bull to a probably a volatile sideways trade for now, while good weather in the U.S. offsets fears over Northwest India's Gujarat area. So
okay, so you brought up rice. That was the next question I was going to talk to you about. So I'm looking at a rice chart here on businessinsider.com, and it's just over the last, you know, well, the last month for sure, if not the last 60 days. I mean, it's just been a like a very much just a slow rise up. So as you're looking at what's going on there, Shawn, and you stack that up against wheat, like you've talked about, you know, there's going to be something that snaps there. And if India does come through and say, hey, you know what, we're pumping our brakes on our rice too, that's going to cause could you see rice being a catalyst that spills over into other commodities and could be somewhat of that bowl that we're talking about now to feed some of that fire again?
Well, they sold record amount of rice exports this year up to this point, similar to what they had been doing with wheat. And if we get off to a very slow monsoon start, especially in that northwestern area where they grow a lot of the core rice, I think they're just going to say, you know what, we're just going to put a pause button on right now.
Yep.
So it wouldn't surprise me if later on, mid late June, we see that. And when we look at our natural climate cycle algorithm, with a La Nina that's starting to weaken, but and then moving towards El Nino, but kind of that transition summer we've talked about. We've laid over a lot of these different cycles that we follow: PDO, AMO,
right,
all these different things, QBO, and we think our best opportunity, because kind of what happens in the transition year is La Nina hangs on and gives you one final brief period of hot, dry weather later on in June, July, and then it gives way to a more cooler weather pattern, which is the lead up to El Nino coming. Okay.
Right. Yep.
So I think that the risk for, everyone's asking me, when's the likelihood that the US is going to have some kind of a weather scare to trade, right? It doesn't have to be long, but some kind of a weather trade. I think that, end of June into the first 2 weeks of July, our work says that's where we could have some brief worry, too hot, too dry, too long, not a crop problem, not going to be an extended situation, just a scare. And then the cool, wet weather comes in the back half of July, August, and everything hammers down into the harvest low. So if you think this through, we could have a weather scare in the US. We could have, this slow monsoon development where the Indian government decides that maybe we're going to halt rice exports for a little while. And then we've been talking about this potential for a European drought, especially in France and areas right, where that could come to a head in mid. So that everything's pointing towards late June, first part of July as some kind of a culminating weather scare potential trade that you typically get. You always get something every year before the market then rolls over. It usually means a lower high if it's just a weather scare, not an actual crop problem. But let's say you're a producer and you miss selling everything, or you're saying where might there be another opportunity to sell? I might be looking for late June, first part of July as your last window to get something done, before you're gonna have to sell the harvest lows. So
right. Okay. Right on. All right. One thing that we don't have, I think we talked about it maybe 2 or 3 times on here, but just kind of a measure of the economy, I guess, is a good way to put what that is. But when you look at something like lumber, all right, so here we have interest rates are climbing up, housing starts and those kind of things are all going to be affected by that, although they haven't been really affected by it yet. And as you're looking at what's going on with lumber, I mean, lumber has had a pretty big slide over the last 3 months. He had a high of about $1,400 linear foot, and now you're down at what is it now, $651.90 right now. So that's a pretty big slide from what we saw. We saw something similar to that coming out of COVID and the lockdowns and those kind of things, where we saw the $1,400 range for lumber, and it kind of trickled back down. And then we had everyone getting back out and demand shot back up, so on and so forth. Now we're back to where we are now. So Shawn, looking at lumber, am I going to keep paying $8 a 2x4 at Home Depot for lumber here?
Remember, lumber was actually as high as over 1,600
right,
a couple of years ago, and now we're under in the 600s. So we've had a kind of a crash, bubble top crash, we call it. Mm-hmm. I mean, if obviously some of that is a function of the lumber mills, obviously increasing supply. Sure. But obviously it's some demands. Remember, a builder of a home doesn't say, okay, we're going to build this home, let's go buy the lumber today. I mean, they forecast this, right? They have their schedule 6 months, 9 months, 12 months ahead of what they're going to do, and they pre-buy the lumber in advance of these projects. So they know they have it, they have the price locked in. At least that's what you're supposed to do if you're doing a good job of managing your costs against your inventory. So even though the numbers on real estate are showing only, some modest declines right now, the lower price for lumber is telling you that the future demand for lumber, the lumber looking out 12 months from now, they're not buying lumber. The demand's really, really weak, meaning that the expectation is that when we're sitting here today, 6 months, 9 months, 12 months from now and having this discussion, we'll see housing starts way down, mortgage applications way down, permits way down, prices rolling over, maybe they're down 10, 20% in many areas. That's the kind of thing that we're going to likely be seeing. And the lumber is always a forward-looking price. It's telling you what the demand's going to be, not what it is right now. And so that's why people always look at copper prices and lumber prices as two very good leading indicators for the future possibility of the economy. And of course, the lumber price has dropped from $5 into low fours over the last 3 or 4 months. So both markets are saying economic activity 6 to 12 months from now is going to be considerably weaker than it is right now. And so I think, there's a lot of other ways of looking at the economy. There's a lot of other ways you can try to discern what's going on, but those are two benchmark ways that have stood the test of time for decade upon decade upon decade about giving you a pretty good outlook for what the economy is going to be doing. And, and it makes sense. We know what's going on with inflation. We know what's going on with people's incomes and buying power and we know what interest rates are doing. And it just makes sense that there's going to be, a pullback from all of this. How strong a pullback? How long will it last? Obviously, we just have to see how everything plays out and take our cues from that.
Yep. All right. Another thing here that we've talked about quite a bit, and especially the rise where we're starting to see different biofuels and how they play into that, and also just the overall shortages of vegetable oil coming out around the world, especially what's going on with sunflower oil and those kind of things. Soybean oil had a pretty good run up in April. We saw that shot up there, and it's kind of trickled back down, but it's still at a level that's showing some movement there. And I guess, Shawn, as you look at that world vegetable oil supply and what's out there now, how do you see that playing in, especially with this continued talk of renewable fuels when it comes, especially like, airplanes and those kind of things, airplane fuel?
If I'll just speak on the U.S. government specifically, because I'm not that familiar with Malaysia, and I know there's other policies elsewhere that are also, pushing this renewable diesel thing, but I'm not as educated. But clearly, so long as the U.S. government is behind pushing renewable diesel from vegetable oil and mostly from soybean oil, the soybean oil price needs to stay at a level that allows the crushers to make money so they can crush the beans, make the oil that's going to make the renewable diesel. If you look at the numbers that we could be looking at a couple of years from now in terms of how much renewable diesel will be needed and how much bean oil supplies will be needed to satisfy the demand for renewable diesel, they're very, very high, Casey. We need to, we actually probably need to be planting 5 million more soybean acres over the next couple of years than we are today in order to satisfy the demand, if the government stays behind it. Now, of course, if crude oil drops down to 30, we're in trouble, right? Just like ethanol and corn. Obviously, you'd kind of need crude oil to probably maintain something like $60 or above to make it economically sensible to do it. I'm not here to say it is or it isn't, but obviously that's an important feature. But that's really in a nutshell what the soybean oil price is all about. Now, when overseas, palm oil is a tree crop. For those who don't know, it's a tree crop. It's kind of like a coffee crop or orange crop or a cocoa crop. It's a tree. And so, they've had they had a little bit of a problem with too much rainfall here the last year that kind of clipped some of the production, from what they were expecting, although the prospects for production look better. We talked about how they had put a temporary ban on palm oil exports, but they only had 30 days of storage. And of course, magically, I think it was a week ago, they said, yeah, we're back to exporting again, because they have to, right? So I kind of think we're at a plateau, meaning and I don't see necessarily we have to have an imminent crash. At the same time, I'm not sure that the bean oil price, necessarily needs to be much higher. I think it's at the price that it will get the job done, so long as the government keeps supporting it. So I kind of just feel that, if you're someone looking at, vegetable oil prices overall, we're probably near a high of some sort, that and maybe some kind of an extended topping pattern until the world catches up and finds a way to feed this need. Obviously, a huge soybean crop in the U.S. would help. And we also talked about this before, Casey, about what happens if you keep crushing soybeans for oil, but the feed demand isn't there for the meal. What the meal price keeps falling, but while the meal price keeps falling, at some point the crush margin is going to lose its profitability. So it's going to be very interesting to see how far can we take bean meal down and bean oil before you ruin the economics of crushing oil, or for that matter, for using bean oil in the production of renewable diesel. So my general view is I don't see a lot of upside here in the short run, and I actually don't see a whole lot of downside here in the short run, other than, if soybean prices really get hit, there would be some general drag down in bean oil, but probably not substantial.
Yep. Okay. Well, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what it is you're doing at Hackett Financial. What's the best way to do that?
Our website is Hackett, HACKETT, advisors.com. Lots of information on there that goes over our weather algorithm, our capital flows algorithm, and other tools to see if we can be of value to your listeners.
Right on. I am Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related and for all the information for the Moving Iron Summit coming up here in Nashville, Tennessee. That'll be September 6th, 7th, and 8th at the Hilton downtown. If you're interested in attending that, go to the upper right-hand corner, click the Moving Iron Summit link, and all the information is there. If you need more information about that, send me an email at MovingIronPodcast at MovingIronPodcast.com, and I'll be sure to get that over to you. Shawn will be there. He'll give a nice little talk about what's going on in the marketplace, and so it'll be interesting times. So, Shawn, appreciate you being on the podcast.
Thanks, Casey. Great to be here. See you next week.
Yes, sir. One last thing I want to throw out there. I've got a friend of mine, Alex Yurchenko. I've talked about him on here, where he was the gentleman that I was friends with that was stuck over in Ukraine when the war first started off, and he has decided he's going to go back and hand out some humanitarian aid. So he has a GoFundMe page. So check that out. His GoFundMe page is Help Alex Transport Aid from Poland to Ukraine. Go to Google, look that up on the GoFundMe site. I'll have links and stuff out here, but help support that. He's rolling the dice here, and he's going to go out and try to help his fellow countrymen. So if you're interested in helping him do that, greatly appreciate that. So with that, I'm Casey Seymour with Shawn Hackett. It's going to move smart, folks. Out.
Moving iron in the 21st century.